In the ever-evolving landscape of digital payments, PayPal, a once dominant player, finds itself navigating turbulent waters in Q3 2023. The company's performance metrics paint a worrisome picture: a decline in the user base, significant contraction in transaction margins, and projections of slower revenue and profit growth. These challenges have prompted a change in leadership, with a new CEO at the helm attempting a turnaround strategy. However, this strategy has faced criticism for lacking a clear value proposition and failing to address the core issues of declining user growth and contracting margins. One of the key issues highlighted in the bearish article is the declining user base, a critical metric in the digital payments industry. While total payment volume continues to rise, the total number of active accounts has seen a decline for several quarters. This raises concerns about the quality versus quantity of accounts and whether the shift towards non-branded transactions, which typically carry lower margins, is eroding the engagement from PayPal's branded consumer base. Financial reviews further compound the challenges. While revenue increased by 8%, the transaction margin witnessed a substantial decrease of 560 basis points compared to the previous year. The operating income did grow by 4.5%, attributed to cost-cutting measures. However, these cost-cutting measures may not be a sustainable solution for long-term growth, and the article questions the viability of such an approach. The market competition poses another significant challenge for PayPal. Traditional credit card companies and emerging mobile payment processors like Apple Pay are formidable opponents. The article suggests that PayPal's crypto business, once thought to be a potential growth driver, has shown limited potential. This, combined with the competitive landscape, contributes to a less optimistic outlook for PayPal's future. The bearish article also delves into the market position of PayPal compared to its competitors, specifically Square, Venmo, and even iMessage. Concerns are raised about a potential shift towards non-branded transactions, which are lower-margin activities, and a diminishing engagement from the core consumer base. The frequency of usage among various platforms is compared, highlighting potential challenges for PayPal in maintaining user loyalty. The new CEO's turnaround strategy comes under intense scrutiny. Criticized for lacking a clear value proposition, the strategy appears to fall short in addressing the fundamental issues of declining user growth and contracting margins. The article expresses dissatisfaction with the CEO's ambition to transform PayPal into a platform company, deeming it uncompelling. Furthermore, PayPal's data strategy is unfavorably compared to Apple Pay's emphasis on privacy, raising concerns about how user data is being handled and whether this might be contributing to the decline in user trust. The evaluation of PayPal's valuation adds another layer to the bearish perspective. The article argues that PayPal currently lacks a clear and compelling value proposition for customers, indicating a relatively weak market position. This assertion aligns with the conclusion that the business appears broken, despite what might seem like a cheap valuation. The bear case, in its concluding remarks, paints a grim picture for PayPal. It suggests that the company has entered a phase of decline in user base, and the new CEO's turnaround strategy is deemed unsatisfactory. The lack of a clear and compelling value proposition, coupled with concerns about data strategy and competition, leads the article to claim that PayPal's risk now outweighs the potential reward. While the bearish perspective is certainly compelling, it's essential to consider potential counterarguments and alternative viewpoints. One could argue that the digital payments landscape is highly dynamic, and companies often face ups and downs. PayPal's long-standing presence in the industry might provide it with the resilience needed to weather the current challenges. Additionally, the new CEO's strategy, although criticized, might take time to yield results, and it's crucial to assess the long-term impact of the proposed changes. On the financial front, the decline in user accounts is a valid concern, but if PayPal can successfully shift towards higher-margin transactions or introduce innovative features that attract users, it could reverse this trend. The emphasis on cost-cutting measures may be a short-term solution, but sustainable growth will likely require a more comprehensive approach that addresses both revenue and cost considerations. Competitive pressures are undeniable, but PayPal's established brand and global reach could give it a competitive edge. The crypto business, while currently showing limited potential, could become a significant driver if the regulatory landscape becomes more favorable or if consumer sentiment towards cryptocurrencies shifts positively. The bearish article's comparison of data strategies between PayPal and Apple Pay may oversimplify the complex considerations involved in data management. Privacy concerns are undoubtedly crucial, but users' expectations and regulations also play a role. PayPal may have strategic reasons for its approach to data, and the impact on user trust might not be as severe as suggested. Valuation is a nuanced aspect, and while the article claims a lack of a clear value proposition, investors may see potential in the company's assets, user base, and global presence. Market sentiment can change rapidly, and a perceived undervaluation could attract value investors who believe in PayPal's long-term potential. In conclusion, while the bearish case presents valid concerns about PayPal's Q3 2023 performance, the new CEO's strategy, competition, and market position, it's essential to approach this analysis with a balanced perspective. The digital payments landscape is dynamic, and companies often navigate challenges to emerge stronger. Only time will tell whether PayPal can address these concerns and regain its position as a leader in the industry. Disclaimer: the information is for general purposes. Viewers should conduct research and consult professionals for financial decisions. Please consider liking, subscribing, and sharing with friends to support our content.